Hello, and a warm welcome to Desi Fire podcast. In this episode, we have with us Yash from the Alt Investor, and we are going to talk to him about what this alternative investing is all about. For those of you who are watching this channel for the first time, I'm Ravi Handa, your host for the show. And on this channel, we primarily talk about financial independence and early retirement. So if you have any interest in those areas, I would request you to like this video and to subscribe to our channel, so the probability of our videos coming in your feed increases. And on that note, I'd like to welcome Yash. Yash, welcome to the show. Can you tell us a little bit about what the Alt Investor is and what you do over there?
Thank you, Ravi, for having me on the show. Very delighted to be here. To give you a little background as to why I started Alt Investor, what do I do there? I worked in the UK for last 5 years with a big asset manager. I was planning to move back to India. I decided, okay, people know me in the UK, people know me in London. How do I get known in India? What can I do to increase my reach or network with the right set of people? And that's where I identified, okay, alternative investments, which I was primarily doing for last 2-3 years in my family portfolios, investing in different asset classes. I decided, okay, let's write about these different models, instruments out there, because I saw a lot of mis-selling happening in the way these instruments were being communicated. So that's where I launched a blog. It's called The Alt Investor, where we primarily educate normal Indian retail investors as to how different alternative investments work, what will you actually get via investing in them, and what goals will you achieve. That's our objective. We are nothing more than an educational blog. That's
how long have you been running this blog?
Since last June, so around 8 months now.
Anyway, to start from zero, what exactly is alternative investing all about, or alt investing all about?
See, alternative investments have been given a broader term because they're fairly new in India. But if we talk about traditional methods of investing, they are primarily your mutual funds, your direct equity, or your bank fixed deposit, or corporate deposit, something like those. Or those are called the traditional instruments. People are decently aware because there's a lot of marketing being done around these instruments, like mutual funds. Sahi hai, Small Case came out and did a lot of stuff on direct equity, baskets, and all that. So people know about them. Alternative investments are something that are not these instruments. So to divide alternative investments, define them, I would divide them into 3 different categories. One is, equity-based alternative investing. Second comes debt-based alternative investment. Third comes property-based alternative investments. By debt-based, I mean investments into corporate bonds or, structured debt instruments, which some of these startups or platforms are doing, or, lease financing, invoice discounting. All of these are debt-based. You are not taking a share in a company in form of a equity, but you are giving out debt for which they will pay you some interest. Second comes the equity-based investing, which is also considered as alternative, which is more into venture investing, or private equity-based investing, where let's say you become a part of an AIF, you commit to a minimum ticket size of 2-3 lakh rupees per investment, and you commit to at least investing 25 lakhs in the next 3 years, and that's how you take ownership in a company via a different vehicle. Third is property-based investing, which is kind of picking up right now, which is with these fractional ownership platforms, which are giving maybe holiday homes or commercial real estate in fractional units to everyone. So there the ticket size is a bit high, maybe starting at 10 lakh rupees, but SEBI is really, really promoting that sector. So 3 broad categories of alternative investments.
Fair. So please correct me if I'm wrong and if I've understood this correctly. Your angel investments that you do would be a part of the alternative space from the equity side of
Angle.
it.
Yeah.
Then from the debt side of it, you would say it would be asset leasing, invoice discounting, probably P2P, etc. would come into the same
P2P as well, yes.
segment as well. and then the property one where it is the fractional real estate, or even would you also consider the REITs or the InvITs which are coming as a part of the alternative space, or not so much?
What about crypto?
And what about crypto? Would crypto be considered a part of the alternative space or not, in your opinion?
Yeah. So REITs are a form of alternative investment in my opinion, but they mimic very closely to equity. So people sometimes when they're buying a REIT will not get the experience of an alternative investment, which is kind of new or unstructured, where you have to do a lot of paperwork. REIT is very simple to buy. Go open a Zerodha account or a broking account, just punch in your order, you can buy. So, but they are fairly new in India, and SEBI has actually come up with another regulation called SM REITs, small and medium sized REITs, which these fractional ownership platforms are also now looking into. Ultimate objective is to list these SM REITs onto the exchange so that people or more people like you and me can participate very easily. So that's on the REIT angle. For crypto, I am a little biased on crypto. Unfortunately, because I don't understand the underlying asset in a crypto. That being said, full disclaimer, I do own a bit of Bitcoin. I bought it when it was $70,000 one coin. Now it's much, much more. So I have been just in the crypto language hodling it. So I have hold it till
$20,000 or 17 or 70?
Sorry, $1,000, 70,000 INR. My bad. $1,000, 70,000 INR ka tha. So that's where I bought some Bitcoin, and then I have just kept on holding it till now. But if you ask me whether to consider it as an alternative asset, no, because I don't understand what the underlying asset is. What am I actually buying?
Fair. So on your blog, what also you talk about the equity-based alternatives as well as debt-based alternatives as well as real estate-based alternatives, or you limit yourself to one particular part of it?
See, we are 90% debt-based alternatives because a lot of innovation is happening in that area. 10% property-based alternatives. We have talked about fractional ownership and tokenization in the real estate space. But more or less, it's always debt because not a lot of people are comfortable with equity-based investments right now.
Fair. So let's say when we talk about the debt products that are there. Now, if I look at the sort of traditional debt investments that most people have, I have, would be either some sort of bonds or, fixed deposits and stuff like that, maybe a corporate bond or a fixed deposit. Or it would be the debt mutual funds which exist. So my question essentially, Yash, when we talk about alternates is, we have debt funds and those products which are available, DFTs, etc. Alternates have come up as an option. But why do we even use them? What are the pros of using them and what are the cons of using them?
So when we talk about pros, India has been plagued with just 2 or 3 types of debt instruments, fixed deposit being one of them. Second is, good rated corporate bonds. People who want to maybe take on more risk and enjoy the higher return can probably look at alternative investment. That's one of the pros of alternatives, that, you get more risk.
Higher returns.
Or India mein wo mindset hai, I want higher returns for my money. If you're not making it at least 12%, what are you doing? That's the mindset in India. So that's where people probably navigate to, more venturing out more different types of instruments. So the cons of alternatives, debt-based alternatives can be, there are so many different types of models coming up, and, there's so much regulatory uncertainty in some of these models that when you invest, SEBI might come in and say, अरे ये क्या किया आपने? You can't raise money like this, and you can't invest in these kind of instruments, and then shut down the whole investment scheme. And in some cases, your money might even get stuck in some of these kind of schemes. We have one example which probably we'll discuss later down. So there's a bit of regulatory uncertainty.
So the idea, if I understand it correctly, is that there is a chance of making higher returns than you would make in your traditional debt products, but that comes with an additional amount of risk where people do end up losing money which has happened, and we will talk about some of those cases later in this video. But then that becomes a more important question, so to say, that you are taking this additional risk for an additional what percentage? An additional 3% or an additional 5%? What should my expectations be that if my debt fund, as an example, is giving me X%, my alternative portfolio with risk adjusted everything, what should my expectation be? Okay, it will make me X plus 2%. Will it make me 2X? Will it make me 3X? What should my expectations be with respect to this higher return that you are talking about? How much higher when compared to, let's say, a traditional debt fund?
See, I mean, it depends on everyone's risk profile, but if I have to give my example, if a traditional debt fund is making me 8%, I will only invest in alternatives if it's making me at least 13%. So 5% spread extra. And I'll see, okay, within that 5% spread, what is the best risk adjusted reward that I'm getting? Which bond looks more likely to achieve me that goal? So that's what I would do.
Fair enough. So 5% difference is what you should target. Now, when you were talking about the various categories which are there, so one was what are these categories which are there in the alternative debt space?
So I think the most famous in the Indian market right now is invoice discounting, which is run by most of the platforms. Second comes securitized debt instruments, which is a form of a bond, but it's structured via a trust. Third comes lease-based financing, be that via direct financing or via bond or some form of leasing-based financing. Fourth, actually third can be P2P in terms of size. P2P lending is also quite big in India. Fourth is lease financing. Then fifth are some form of agri investment platforms right now, which have also quite grown in size.
Okay. So suppose if I have to start somewhere, what do you recommend I start with? So you gave us 5 options. If I think invoice discounting is one, SDIs are second, then P2P is 3, then
fourth is lease financing.
Asset leasing and lease financing. And what was the fifth one?
The agri platforms.
Now, if I have zero today and I want to get started, I want to learn about this space. Should I evaluate each deal individually? Okay, I should look at all 5 of them, or that no, Handa, you are starting out, you should start with lease financing or you should start with invoice discounting. How does one begin in this space?
So again, that depends on the risk profile and personal preferences of the investor. As a complete beginner, I would recommend you to start with regulated products. That will be the P2P space, which is regulated by RBI, or the SDI or the corporate bonds, which are listed, rated, regulated instruments by SEBI. That's where you should start. There is a wide opportunity in terms of whatever risk you want to take for the reward you'll get based on the credit rating of different instruments. If you are a savvy investor, you may want to start with invoice discounting if your time horizon of investment is low. If your time horizon of investment is a bit on the higher side, we're talking about 2-3 years when you're playing in the debt space, then you can start with lease-based finance. So that's what I would do personally for my portfolios.
Okay, so it actually depends upon what sort of an investor you are, and based upon that you decide whether to go for P2P or whether to go with asset leasing or whether to go with invoice discounting. So we understand about the categories, but what sort of percentages of what percentage of my portfolio can I invest in assets like these? For example, for equity for young people, it is often recommended that you have a large amount of 50%, a 60%, or a 70%, or a 90% in equity. What percentages do you think should people be looking at when it comes to alternatives?
A great question, Ravi. So, talking about my personal portfolio, which can be taken as an example, I have 85% of my investment portfolio allocation in pure equities. When I mean pure equities, I mean direct equity plus equity mutual funds, be that small cap, mid cap, large cap, whatever that allocation is. The next 5%, I do small checks, startup based equity investing. That is also just from a pure experimentation point of view. Gives me the chance to call myself an angel investor for the heck of it. The next 5 to 10% is in pure debt-based alternatives. That's just managing my liquidity around. I don't want that money to sit in a savings account earning 4% interest. Can I earn, three times that with, proper risk assessment and analysis, and then earn a better risk-adjusted return? So that's what I would do. But again, if you're a complete starter, I would recommend to keep this number below 5% for a young person. Do not get swayed by the high returns.
तो ये जो एक्स्ट्रा रिटर्न्स हैं ये आते विद एडिशनल रिस्क हैं, और रिस्क इनमें ये नहीं होता है कि आपका रिटर्न 12% की जगह 11 आ जाएगा या 10 आ जाएगा. The risk that you have with these instruments is that you will lose your principal as well. In case you will not lose it, it will at least get stuck. For example, my money has been stuck in a deal that I had called Big Spoon. Yash, I was speaking to Yash. Yash had it stuck in a company called ARZU. There have been a bunch of other examples. I have friends whose money has been stuck in Gropital is one of them. Then another one is Credex. And all of these deals, the one part that is common is that it is not that your returns, instead of a 12% or a 13% or a 11%, what the expectation was, it's not that it became 9% or 9.5% or 5%. Your principal has been stuck. For example, the Big Spoon deal that I'm talking about, in that, I think I got somewhere like 50 to 60% of my principal back. But I lost all the returns that were there, and I lost a portion of the capital. In the other cases, say for example, Arzu's case, what I read or understood was it isn't that the company is doing horribly wrong because they raised a ton of funding very recently. So can you tell us a little bit about what happened in the Arzu case?
So, ARZU was one of the companies who raised money on Giraffe. It was called Giraffe before. Now it's called Alt Giraffe. They have rebranded their unregulated part of business. Uh, they had already done around 180 CR worth of invoice discounting on Giraffe. Uh, they were raising funds probably like mostly for 30-day time period against the invoices that they were, for the business that they were. That was the suddenly on 2nd of December or on 3rd of December, if I'm not wrong, they were meant to repay the money to investors for a deal they did on 3rd of November. They were not able to do that. So Giraffe communicated to all the investors that, there's a slight delay because Arzu has run into working capital cash flow management problems. And they were planning to probably solve it within the next 7 days, working with Arzu. 7 days happened. Arzu was not able to, repay back because the concerns were still ongoing. That kept on going. On 20th of December, with some hope, uh, the existing investors were able to get 25% of their outstanding amount back with the help of Giraffe, intervening with Arzu. Uh, there was some news floating around that Arzo is going to get a big round of funding, but it's been delayed because of end of year. Everyone is on holiday. It's Christmas time, so investors are not really, signing term sheets and all that sort of stuff right now. So it got delayed into the next year. We were expecting some response on, in the early year. Uh, we got some confirmation from Giraffe that around 14.4% of another outstanding amount will be paid by January 12th. Uh, that didn't happen, unfortunately. On 12th of January, we again got a email from Giraffe that they are running into problems with their bank. By that time, they had raised one round of funding uh, to sustain their businesses, but it was not enough to, let's say, pay back all the amount. They had to create a plan to pay back all the lenders because we were not the only people who they owed money to. They were distributors, they were different bankers, lenders, other lenders. So they had to create a plan. But unfortunately, that situation has progressed. We have received roughly around 30% of our principal back, but we are still not sure how we'll be able to recover the next
The
70%
other
because all the other lenders are not able to come to terms with ARZU as to what should be the repayment. Everyone wants the money fast, but nobody wants to
But the company is
wait.
still functional. It is not that the founder
It's
has
still
run away
functional.
or anything like that.
No, no, no. It is still functional, and they are planning to raise more money, and investors are supportive as well.
Hmm.
They want a debt resolution plan from them.
Okay, so hope is there compared to something like Big
Hope is
Spoon.
there, of course.
Uh, but
Hope is there.
so this is one thing which I, as you talked about giraffe communicating at various points of time. Even
Yeah.
with Big Spoon, this is something that I really liked about Grip, that they also kept on communicating at various points of time. However, what one of my friends' experience has been with the credex platform. I'm not exactly
Hmm.
sure. It was some an invoice discounting deal with
Yeah, yeah, it has
West
to be.
or something like that. I forgot the
West Coast
actual
paper
name.
mills.
Yes, so that's the one. And there, the biggest objection that my friend had, which is something that I've never used credex, but I've used Grip, I've used Giraffe as well. Credex doesn't really communicate that much, and which gives me the sort of feeling that until and unless you communicate the problems, you're not doing your job as a platform. So, would you have any experience with Credex, or would you know about this particular case? What happened here?
Unfortunately, I don't know about the particular case, but yeah, I mean, I have heard from other investors on credits that their communication is at not par with other platforms. As a platform, you do have a fiduciary responsibility to keep your investors updated. Unfortunately, I think it's lacking in those areas is something that they need to improve on.
Mhm. So, Credex default was invoice discounting. Big Spoon was asset leasing.
Leasing,
ARZU
yes,
was again
invoice
invoice
discounting.
discounting. Do you have any examples from, let's say, the P2P issues that have popped up, or maybe the Agri one that you were talking about as an alternative?
Yeah, so I think the bigger one right now is the agri one, company called Gropital, where it's not in default at this stage, but people are concerned if they will be getting their money back or not. Uh, for your viewers' context, Gropital is a platform which gives out tax-free returns. They basically take your money, pool it into a vehicle, and then their claim is that they take farmlands on lease, do farming on it, and whatever returns they get from that farming is then passed on, whatever is promised to you as an investor, and it's all taxed. That's the premise. But SEBI has released an order, I think on 26th of or 27th of January, saying that what Gropital did, which is pooling of money into one vehicle, they termed it as collective investment scheme and termed it as illegal and froze all the accounts of Gropital, their related companies, and also promoters' own company, and also barred them from the stock market until the investigation is over. So investors they have invested big amount. Gropital was able to raise 182 crores of rupees of money, and majority of all of the investors are basically stuck until the SEBI investigation is over. But that's a risk that you as an investor or your viewer as an investor will take if they are peddling into unregulated alternative investment.
True. So that's why, to be really honest, I did not know that Big Spoon is going to default, or I'm sure even you did not know
Yeah,
when you invested in ARZU that ARZU is going to default. Uh, but we, at least, anyone who is investing in this space should be fairly aware that if you are putting money into 10 of these deals or 20 of these deals, some of them are going to get stuck. That's the nature
yeah,
of the business which is there. So, which brings me to one of the earlier questions that you had talked about, that you mentioned that you would put 5% in these sort of assets, but the ticket sizes are really, really low. So, in that 5% itself, you can have 20 deals, you can have 50 deals, you can have
yeah.
five deals as well. What do you think is the appropriate number of deals for an investor? Because maybe 50 becomes too much, maybe 5 becomes too much. So what would be an appropriate number so that your risks are also a little bit, diversified? That suppose you invest in 10 companies versus you invested in one and that only defaulted or that only got into trouble, would be problematic. So what would you recommend for that?
So I would say you're within that 5%, 10% of that 5%. So half a percent should be a maximum exposure to any sort of deal. Don't go beyond that. That's what I do. So if that number for me is 10 lakh rupees, 10 lakh divided by 10, 1 lakh rupees, I will not go beyond 1 lakh rupees.
Fair. हाँ तो मतलब so if that number is going to be 0.5% of your portfolio, so even if there is a default, you would probably remake that money
You'll be
in
fine. Yeah.
fairly quickly. So it's not that there would be a lot of pressure on you. But I do keep reading, information about people whose money have been stuck in places like credex and the particular
Yeah,
example that I'm talking about. And I do believe there
exactly.
is that problem that exists, that people don't really do 10 deals at a
Mm.
time. So I agree on the deal part of it. Would you also recommend diversifying on platform basis, that okay, you do some on giraffe, you do some on grip, or the platform is not really relevant in this space? Say for example, if I'm
So
buying
there's
shares, if I'm buying from Zerodha or ICICI Direct, it doesn't matter what share I'm buying matters.
exactly,
So
exactly. So you said it. It primarily matters on the issuer, but because the space is new, the due diligence of platform, the credibility of platform also matters a lot. Are they putting the right measures in place before bringing that deal onto the platform is what is important. Because there are no harmonized rules here. When you buy from a Zerodha or ICICI Direct, they have harmonized rules which are defined by SIP. These platforms don't at this stage. So the credibility and pedigree of founders team matters a lot.
So how do I judge whether? So suppose tomorrow there is a platform called the Handa platform. How are you going to judge whether
Hmm.
this platform is a good choice? Because all of these platforms are new; they have popped up in the last 2-3 years. So how do I evaluate whether Handa platform is a good platform to put money in or not? What are the things that I can look at?
So there are three things which I personally do. One is the founder's background. Do they actually come from a financial services background or not? Uh, Second is, do they actually have a risk and compliance function? Can I go on LinkedIn and see, okay, this person is working in risk management at this particular platform or compliance uh, on this platform? Third is, who are the type of investors who have basically funded that platform? These are the three things that I look at primarily.
Okay. And based upon these three things, would you be able to name a couple of platforms which meet this criteria of yours?
So let's say Giraffe has a very good pedigree of founders. They come from a very, very solid financial background.
Giraffe is
And
one.
Giraffe is one, Grip Invest is one.
Hmm.
We're talking primarily about debt-based platforms, right?
Debt-based
So
platforms, yes. How about Wind?
Wind, of course, yes. Wind also is a. I know Wind from the day they were called Growfix.
Same here.
So
Same here.
yeah,
That's when I
so
had invested on the platform as well. So, like, I'm thinking about what all platforms I'm invested in. So, Giraffe, I have an investment in. Grip, I have an investment in. Tap Invest, I haven't tried, but I will give it a shot. Wind is something that I have an.
is there, then if you talk about these OBPP platforms, there are plenty. India Bonds, which was basically AK Capital, which is one of the largest debt
Hmm.
issuers or brokers in this space. It's from that segment. Then a Bonds India karke hai, Bonds Cart hai, the fixed income. There are many. So these are all regulated OBPP platforms. So actually, that should be the fourth point. Are they regulated? If they
Hmm.
are unregulated, then the first 3 points become even more important. If they are not regulated, actually, sorry, the first 3 points become more important. If they are regulated, then you have some level of comfort that SEBI has done their job.
हाँ मतलब बेसिकली अभी तुमको ड्यू डिलिजेंस करना पड़ रहा है, वो लाइसेंस देने के पहले
हाँ,
सेबी ने ड्यू डिलिजेंस कर लिया होगा, तो कम से कम
कर लिया,
वो एक हेडेक तो अपने सर से
निकल गया, हाँ.
हटा. Fair. The next question that I have is, and again, this is coming from my personal experience. Uh, some of these investments, when the returns that you get, some of them come to you as a post-tax and a tax-free return. Whereas on the other hand, in some of these cases, you have to pay, tax at the marginal rate or your slab rate, so to say. So could you tell us a little bit about how taxation works in these alternative investment category?
One is interest-based income. Second is capital gains in every sort of financial instrument that is out there.
Hmm.
When you talk about debt-based investment, you're talking about a bond. You will get coupon payments or interest payments. Those will be taxed at your marginal slab, be that 5%, 10%, 30%, whatever that is. When you, let's say, sell that bond, right now the debt market of India is not that mature, so this becomes a bit irrelevant. But when you sell that bond, if you bought it for, let's say, 1,000 rupees, you sold it for 1,100 rupees. 100 rupees is basically your capital gains. Now, depending on when did you sell that, within 36 months, greater than 36 months, your taxation changes a lot. And that is also different for listed debt, unlisted debt. So that's on the debt side. Then for lease financing, it's different. Invoice discounting, it's flat, at marginal rate, different for different instruments.
What is it for lease financing?
So lease financing, again, if you're structured it via the bond, interest is again at marginal rate. But if you're doing direct leasing, which is the tap invest model out there, they are the only ones doing it right now. You actually own the asset and then you lease it out to the company. So there is something called a section 54, 4480 or 5480. I will have to check. We have a blog on that where you pay flat 6% of the rental income that you get. सो अगर आपको 1 लाख रुपए मिल रहा है तो आप 1 लाख रुपए का 6% टैक्स दोगे directly as a, that's how it works. But I have spoken to a couple of CAs, they don't agree with it, but I have spoken to a couple of CAs who also agree with it. तो वो थोड़ा
ग्रे एरिया है अभी सब चीजों में. हाँ वो तो रहता ही है because.
वही बात है, वो अनरेगुलेटेड स्ट्रक्चर है.
And what about the property वाले जो based assets हैं? What about them? How do they get taxed, etc.?
Rental yield होगी. Rental yield will be again, it's structured in a way that it comes as interest income in these transactions. So that will again be at your marginal slab rate. Whereas your capital appreciation will be based on the long-term capital appreciation gains on the property. वो एक SPV level पे होता है because it's done by LLP. LLP has to pay taxes already. So आपको जो मिलता है that's post-tax.
That's post-tax. So coming to, I think we are almost at the deadline for today. My beer is also over. So to wrap up, what would be, let's say, 3 YouTube channels related to personal finance that you can recommend for our viewers to watch? And maybe if one of them are about alternative investing, something that they can learn from, what would there be any names that you could recommend? Ki boss, go there, listen to it, would be useful.
Well, one is definitely Alt Investor, which is my channel. But
do you post there regularly? I think you post on the blog far more regularly than I've seen on YouTube.
Because making videos is tough and time consuming. So, but we try. But yeah, we have at least 12, 13 videos, which are good podcasts to watch from within alternative space. One is Alt Investor. Second is a guy called Asset Yogi. I think they have collaborated with NDTV Profit, but I quite like that guy in the personal finance space. He talks objectively about different types of traditional plus alternative investment instruments. And third, this is again not personal finance, but Nikhil Kamat's podcast, which is, taking the world by storm. There's a lot to learn about business, finance, funding in general, which may help you in your decision making with respect to general finance as such.
Fair. 3 books.
3 books. So in the finance space, I like Michael Lewis as an author very much. So उसकी एक book है Flash Boys करके, which is into HFT, high frequency trading and algo trading. It's a far more interesting book than any other finance book that I have ever read. It's pure fiction. I mean, it's not fiction; it's a true story, but it just looks like fiction. That there's so much going on within the world of finance, and I have some background in algo trading as well, which is why I really like that book. Second book that I'll give you, it's not a personal finance, but it's a book that has taught me the importance and meaning of life. It's called When Breath Becomes Air. It's by Paul Kalanithi, who was a brain surgeon who studied till 31 PhD वगैरह किया, फिर 2 साल बाद मर गया. Uh, तो ब्रेन की कैंसर की वजह से. So it's a he wrote a book before he died, and very good book. And third one that I wrote was Shoe Dog, which is the Nike's biography by Phil Knight, and that tells you a lot about how entrepreneurship is done, how you can learn about doing business and stuff.
Fair enough. I think on that note, we will wrap up today's session. I'd like to thank Yash for taking out time and explaining the world of alternative investing to all of us. I hope you guys got something to learn from today's session. And if you did, I'll once again request you to please like this video and subscribe to our channel. Hope I earned the privilege of your time. Thank you.